guests joining me for our big picture discussion this afternoon, Michelle Gibley and Randy Frederick. So stocks are down, the Russell getting hit the hardest, guys. You know, Randy, it seemed like the market was going to run with Powell's comments as being positive for risk assets, but we fell short. How come, do you think?
It's kind of an odd day, to be quite honest with you. I mean, when we got that really strong initial jobless claims report this morning, bonds rallied and the rates went down. And then when Powell spoke, rates went back up. I would have expected exactly the opposite in those two scenarios. Makes no sense. It's a good reason that I'm an equity and options analyst, because I can never figure out what's going on with the bond market. I think what's happening is there's just too many negatives outweighing the positives right now. Oil prices are up a lot. Whatever Powell does on the monetary side, that's not going to fix the fiscal problem, which we have right now, and that's too much spending. And with two wars going on, it's almost certain there's going to be even more spending and bigger deficits coming forward. All of these issues, I think, are weighing. We don't have a Speaker of the House right now still. And not only that, we're less than a month away from the continuing resolution expiring. So all of these issues, I think, are just weighing down on people. And it's hard to get excited, even though we got spectacular earnings so far at this point.
Okay. Tesla not helping on the earnings front, but there are some winners in there for sure. Yep. The chip maker's been trying to hold on. Michelle, we were talking about the dollar in the last block a little bit. I wanted to get your thoughts on that too, because the greenback's softening up, but Chinese stocks are weak too. So I'm trying to figure out kind of where the currency trade-off is working right now around higher yields. What's that relationship look like to you?
Yeah, as Randy said, I think this is a little bit of an unusual day. We have yields up, but the dollar weaker. And, I would say that, higher yield is a global trend. It's helping to tighten financial conditions globally. We expect most major central banks to be on hold. Next week, that'll start with the ECB and the Bank of Canada and the Bank of Japan also before the Fed meets. And, the quicker rise in U.S. yields, maybe it keeps the Fed on pause. But, Japan is probably something that's quite interesting that people really aren't talking about.
What do you think the narrative is missing there on that subject?
Yeah, I mean, we have a weaker yen and also higher JGB yields, Japanese government bonds. And, Japan is really trying to pursue contradictory goals. They're both intervening to buy bonds, trying to push yields down, which makes the yen less attractive, and also potentially buying yen to keep the currency from weakening. And, this seems somewhat unsustainable. At some point, the Bank of Japan is probably going to need to allow higher JGB yields and or raise policy rates. Now, it may not happen this month, but the Bank of Japan can be unpredictable. And the reason it matters for investors is because changes in Bank of Japan policy could create market volatility across asset classes globally, and that would be currencies, bonds, and stocks. And
I like that you brought that up, because we were talking about that earlier too, with the fact that yen remains so soft despite all their efforts right now. There is kind of a lot of odd stuff taking place in markets. When does odd turn to panic, Randy? How long can odd be absorbed by the market? Because VIX at 20, we are nearing the high end of what we've seen since we broke down through 20 back in the spring, because that was a big deal.
Yeah, most of the concern in the spring up until June 1st was based on that debt ceiling concern. Once we got past that, we dropped below 20, and we stayed there literally for a couple of months. And it's only just 2 weeks ago that we went back up to that level. 20 is that threshold between normal range, and now all of a sudden people are getting a little bit uncertain. Now, I don't call it anxiety. We get into the high anxiety zone when you hit 30, but right now we're definitely on the cusp of that uncertainty zone, which means there's a lot of people out there who just don't know where we're headed. I think as we started Q4, and I was in this group, I thought we were poised for a very solid rebound in the markets, and I actually thought that was going to happen. All of my indicators were telling me that, and then that was right before the war in Israel began, and that tempered that dramatically. So last week, all we got was a modest upturn. I just don't think we can get any momentum going until some of these issues get resolved. And right now, what the VIX is telling us is that people are getting a little bit uncomfortable. Not panicked yet by any stretch, but certainly on that threshold of starting to get uncomfortable. So I don't know what happens from here. Like I said, we've got earnings. That's definitely working in our favor. When you look at the results so far, and we're only about 16% of the way through the reporting season, but the results so far are way better than they were last quarter, and they're way better than the expectations. So maybe another week or two of that. By the end of next week, we should be at about 30% or so. So that'll give us a good feel for how the season's going to play out. But I'm just not sure if earnings alone is enough. Now, maybe, again, as I said earlier, if we get a Speaker of the House in place, if we can get another continuing resolution or something to ensure that the government stays open for at least a few months, then that'll alleviate some of the stress. But you've still got the wars going on. You've still got concerns about inflation. You've still got high crude prices. All of those issues are going to continue to weigh and keep this from getting too far ahead. And frankly, that just means mostly sideways markets the way I see it.
So far, that's been the way we've held up. Every time it gets hit, we managed to find support in the NASDAQ around that 14,700, even the S&Ps. Still at levels that we've been familiar with very recently, but a little closer to the lows. So we definitely got to keep our eyes on that volatility. Appreciate it, guys. Thanks, Randy Frederick, Michelle Gibley. Good chat here on definitely an odd day. I think we all agree on that. We started the show describing it as a bit odd and finishing it as a bit odd.